What is up, everybody? Today I'll be showing you the 15-minute breakout strategy that I've been using to pass multiple of my Finet accounts and request my payouts. This isn't a hard strategy. It's one of the easiest that I've ever thought, that I've ever used. And I'll be showing it to you guys in depth with the tuned version that I use to bump my win rate up to 70-75%. So what we're going to do is we're going to wait for 9:30 a.m. To pass, 9:45 a.m. Sorry, New York time. So -4 UTC. What we're gonna do is we're gonna mark out the high and the low of the first 15-minute candle when market opens. So if you open the chart, go to the 9:30 candle on the 15-minute time frame, mark out the high, mark out the low. That's what we're gonna show here. So for example, this is the first 15-minute candle of market open. So this is 9:30 on UTC -4. What we're gonna do is we're gonna wait for price to create it, mark out the top, mark out the bottom. What we're gonna then do is drop to the 5-minute time frame, and we're gonna wait for a breakout above or below this range. So not a wick, we need a proper close. So this does not count. We need a full body close outside of our range. After that, we're gonna wait for price to give us a close, a pullback, and then the real move. So our job is to catch this to this move, right? We need to catch this. With here, we're going break even. So same on the bottom side. We're gonna wait for a break below, a retracement, the real move. So we're gonna try and catch this move, right? How are we gonna do that? We're gonna do that using fair value gaps, and I'll show you fair value gaps in a second. Okay, so what are fair value gaps? A fair value gap is basically an imbalance in price. Look at it like it's a weighing scale that needs to be balanced. Right? This weighing scale cannot be heavier on this side than it is on this side. So what will price do? Price will try and create a balance between price to make it stable again. So what is price going to try and do? Price is going to try and balance it out. How are we going to do that? Let's first of all, how to identify a fair value gap. How are we going to identify it? In a bullish trend, we're going to look for the first candle, the top wick, the third candle, the bottom wick. And as you can see, in the third wick, we can see that there is a gap in price in this candle that needs to be filled. So what we're going to do is we're going to mark out a fair value gap. We're going to wait for price to tap into that fair value gap. Right there, we tapped into it and give us a engulfing candle out of it. So this candle basically gets eaten by the green candle. And that's when we take our entry, right? So if we're going to look at this on the bearish trend, we're going to get the first candle, the bottom wick, the third candle, the top wick. We're going to mark out the gap in the second candle. Right? So this is a fair value gap. What is price going to try and do? Price is going to try and balance it out to give us that rejection to then get the engulfing candle out of it. So this would be a bullish candle and this would be a bearish candle. So we know that sellers took over and that the sellers are now in control. Let's look at it on the real life chart. Let's find a good example. Let's go on a 5-minute chart. This is the indicator that I use. You just go to indicators, look up opening, and it will be the first one. Opening range with breakouts and targets, Lux Algo. You put your chart on UTC -4, New York time, And these are the settings for the orb. I recommend turning off show the historical data, but I'll do it for now to show you guys a real example. Okay, so what we're going to do is we're going to wait for price to break below or to break above our orb, right? So this is the first 15-minute candle when market opens. We drop down to the lower time frame, the 5-minute. We're gonna wait out for a break below and look for a potential short. So what do we see here? In the leg downwards, after we closed below, you can see that we created a fair value gap. As you can see, the bottom wick of the first candle, the top wick of the third candle. Price comes in, instantly get pushed down with a bearish engulfing candle. You can always wait for a retracement towards a better entry for yourself. That's why I always do. And I took this trade live on stream, and I just targeted a 1 to 1.3 because I saw that market was consolidating here. Price wanted to take out this liquidity to then give us the real impulse back towards the upside. So after we had that move, you can see that we retraced back towards the top side of the orb. Once we did, you can see that we closed above it. We had a retracement in towards this fair value gap. And as you can see, once price tapped into it, we instantly saw rejection. Price didn't engulf this candle, but what happened is when we closed above this candle, you can see that we created a new fair value gap. This fair value gap got respected as well. As you can see, we had a tap in, closed a bit below, but it instantly had a good pushback. And this is when I entered a long position with my stops below the low of the fair value gap to target a new higher high. Let's look at it on a different pair. This is just a random pair I just selected. As we can see here, we have a push lower, and we can see that these fair value gaps do not get respected. We do not see that engulfing candle. So what we're going to do is we're going to wait for price to give us a clear direction in trend. So we're going to wait for price to break above our orb to then give us a retracement in towards a fair value gap to then give us a push higher. What happened here? We didn't see that close, or did we? It's on the line. It's on the exact line. So I would count that as a close. So as you can see, we created a fair value gap, which price balanced out. Once price balanced it out, we can see that we engulfed this candle. We engulfed this bearish candle right here. That's when I would have entered a long position with my stops below this recent low to then target this high or this high. But as you can see, if we targeted this high, it would have been a 0.87R. If I would target it this high, 1.26. You can always target a fixed risk to reward, which is I like a 1.5. And as you can see, price hit that as well after a quick pullback into this fair value gap to giving us a real move. Now, let's just show you on one more. This is not a good example. Just click a random pair. Here we go. This is one of my favorite pairs to trade with this strategy. Right, as we can see, price closed above, but it has a reaction from this bearish order block. What we can see is that price inversed this fair value gap. So we had bearish movement stepping into the market. Once we did, we had a bearish close. We can see that we left a big fair value gap towards the downside. What can we see is that price pushed it, balanced it out, and had an engulfing candle to close right when it did. You could have taken a short position, which are stops above this high, to then target maybe these lows, or a fixed 1 to 2 or 1 to 2.5, 1 to 5. It isn't a hard strategy. You just need to wait. Trust me, wait for your confirmation. It's very important that when price does not create a fair value gap, you do not take the trade. Fair value gaps give us an advantage in the market to show where buyers and sellers are hiding. If you ever see a trade where price didn't respect any fair value gap, you do not take that trade. I had a fault that I did in my community. I can see if I can find it back on which pair it was. Let me look for you. It was here on Euro CHF. My initial reaction was to sell, right? And what was I thinking? I was thinking to give a sell off of this fair value gap because we had a tap in, then an engulfing candle to then take a short position right here. But what can we see is that price stopped us out. Why did price stop us out? Because in the leg that we had the impulse back in towards the zone, we created multiple fair value gaps, meaning strong imbalance from buyers. And look what happened. Price stepped in towards that fair value gap and gave us a retracement back towards the upside. What you could have done is you could have changed your whole strat towards from bearish to bullish, and you could have seen, okay, here's a fair value gap. Price stepped into it with a bearish candle. We had a bullish engulfing candle out of it. And as you can see, I took this trade as well with my long above here, stops below this low to then target a new higher high. Right? Same here. Why did I take this trade? When I had a bearish close, I did see a fair value gap in the leg on the retracement back towards the upside. If this fair value gap would have been hit, would have been respected, I could have seen, okay, let me look for that bullish engulfing candle, which we had here. I entered a long position on this candle with my stops below that candle's wick. And as you can see, I targeted these highs for a 1 to 1.2, or you could target a fixed 1 to 1.5. It isn't hard. Make these steps clear for you and make sure to follow them. If you don't follow them, you won't be successful. Trust me when I say stick to your strategy. Stick to the things that you teach yourself. I didn't listen to myself and I lost a trade. Why? Because I was getting greedy. You need to focus. You need to see which get respected and which don't. As you can see here as well, we can see that we had a close below. We didn't see an engulfing candle when we tapped in towards that fair value gap, but we did close above. We then had a retracement in towards this fair value gap. And as you can see, we had an engulfing candle out of it right over there. We could have entered a long position with our stops below the low of that fair value gap to then target a new higher high or a fixed 1 to 1.5. Trading isn't hard. You make it hard for yourself. Stick to your strategy, don't overtrade, and don't get greedy. I hope you learned something from this, and I'll see you in the next one. Thanks for watching. Bye-bye.